A Virginia bank has been hit with a class action lawsuit, alleging the bank charges overdraft fees on accounts that are not overdrawn. The First Bank and Trust Company, a well-established institution based in Abingdon, Virginia, finds itself the defendant in this federal class action lawsuit. The bank stands accused of breaching its contractual obligations by unjustly imposing overdraft fees on transactions that did not cause customer accounts to be overdrawn. Chronologically, the story unfolds as follows. The lawsuit was filed by Marty Alexander, a representative of the affected customers. Alexander alleges that the bank's policies exploit consumers, particularly those from lower socio-economic brackets. He alleges the bank schemes to charge overdraft fees on accounts that are not actually overdrawn, which he claims happened to his accounts. The lawsuit seeks restitution, disgorgement, and punitive damages. In addition to these specific allegations, the case brings to light a larger, more pervasive issue: the lack of fee transparency and ethics in banking practices. This situation is unfolding amidst ongoing regulatory attempts to shield consumers from deceptive fee assessments. Firstly, the lawsuit alleges that the bank's policy of charging overdraft fees on transactions that did not overdraw accounts is a clear breach of contract. This practice has reportedly led to financial strain among customers, many of whom were not expecting such charges. Secondly, the representative, Marty Alexander, asserts that this exploitative policy disproportionately affects those in lower socio-economic brackets. This group, already struggling with financial stability, is being unjustly burdened by these unexpected fees. Thirdly, the lawsuit seeks three forms of legal recourse: restitution or a refund of the unjust fees, disgorgement or the surrender of profits made from this practice, and punitive damages, a financial penalty meant to deter similar behavior in the future. Lastly, this case is a striking reminder of the broader issue of fee transparency and ethical conduct in banking. Amidst increasing regulatory scrutiny, it underscores the need for financial institutions to maintain transparent, fair, and ethical practices in their dealings with customers. In conclusion, the lawsuit against the First Bank and Trust Company is more than a dispute over overdraft fees. It is a clarion call for greater transparency, fairness, and ethical conduct in the banking sector. As the story unfolds, one can only hope that it leads to lasting changes in the banking industry for the betterment of consumers. To stay updated on the latest in consumer protection news, subscribe to Breaking Through News on the Newsbreak app or at breakingthrough.com.